All right, today we're gonna continue our journey into the science of banking. Science. Covering the topic, when will interest rates go up for savings accounts? Spoiler alert, never. Okay, I'm just kidding. They will go up, just like that much. That's about it. All right, so in this video, you'll learn why and what you can do to find a better alternative than earning 0.nothing% in that savings account. All right, so the truth is, it will go up, but only by nothing%, right? I think back, even before like mid 2000s, I remember when I was so happy that I found an online savings account that was paying 5%. Believe it or not, it was paying 5%. That same kind of savings account is paying less than 1% right now in 2022. So that's pretty crazy. But it was 5%, and I thought that was pretty dang good, because that's even better than what some of the CDs were paying. But for the most part, even then, banks were only paying maybe 1.5%. And that was when interest rates were much, much higher than they are today. So are they going up? Yes, they will go up. Why did they go up is because, the feds, if you heard people mention the feds, really the funny thing about the feds, the Federal Reserve, is that one, they're not actually federal, they're not actually government officials. And then two, they don't have any reserves. They actually don't have money. They're just a bunch of bankers that try to control a lot of things that go on in the economy. And so what happens is that when they see inflation go crazy, they want to raise rates to try to slow people's spending, right? And when they try to do that, that's great for us if we have money in a savings account. Now the vice versa, when things go crappy in the economy, they start going down the toilet, then they try to lower the interest rates so that they can encourage people to spend more money, borrow, and use money so then they can make more. Well, when you have a savings account, the reason you make money is because the banks are borrowing the money from you. Believe it or not, the banks actually have debt, and their debt is the money you put with them. They don't actually invest their own money. They just take the money you give them and they go and use that to go and make more. So when you might be making nothing% at the bank, they're taking that same money and turning it right around and lending it back to you at 3, 4, 5, 6% whenever you go buy a car, buy a house. Heck, even when you go get a credit card at 10+%, that's your money working against you, right? That's how they do it. So they're just taking your money from savings. So they pay you a much lower interest rate than whatever they earn on those loans. So as loan rates go up, your interest rates will slowly kind of follow up. As loan rates come down, your interest rates go down. If you're around 2020, you already saw, you're like, wow, I can put my money in the bank and make literally just about nothing. And that's why. Now, I'd mentioned about high yield savings accounts. I mentioned where I remember in mid 2000s, there was a 5% high yield savings account. Right now, some of the best ones are only right around 1%. But still, that's better than 0.1%. That's 10 times better than 0.1% if you get that from your bank. So these high yield savings accounts are typically more like these online savings accounts. They might have some restrictions. They're not like you can just walk into a bank and pull the money out. Typically, you just do an online transfer from that savings account to your own bank. That's how you get access to that money. So it's more tied up. And banks love money that's tied up, because if you leave the money in there and you don't touch it, like good boys and little girls, what happens is that they'll pay you more money. And of course, because they're not paying for all the other expenses like hiring a teller to tell you,
don't you know how to count your money? Seriously, you're gonna ask your balance again? You can just go online and check this. I'm gonna tell you to do this again. Deposit your check online, please. Stop using me so I can get laid off.
That's what bank tellers are telling you. They have to pay those bank tellers to have a bad attitude with you. So as a result, that's why you get paid less on your savings account, because they have to pay more money. But an online savings account, they don't. So they can afford to pay you a higher return on that money. Albeit, it's not that great of a return, but they can pay you more. So the question is, can we do better than a higher yield savings account or an online savings account? And the answer is 100% yes. Absolutely. So to give you an example, in my own life, for our own cash reserves, my wife wants to have a lot of money sitting there that we don't use. And so she said, Chris, I want to make sure we have a good amount of money in there that if we could not earn money for 12 months, we have enough in savings to be able to pay for all of our expenses. Now, of course, you think about it, especially with having 8 kids, it's like seriously, I'm like the man, not the mother in the shoe, I'm like the man in the shoe with all the 60 some odd kids running around. I mean, it can get pretty expensive with a lot of kids, especially with that 5 of them are teenagers now and can eat my left leg. I mean, they're just this sick, it's ridiculous. So it gets expensive. So we keep a lot of money sitting in reserves. Now, we had some money in the online account as well as in the bank. But as we looked at it, we said, the bank pays us nothing. Even this online savings account doesn't pay us a lot. Where else can we keep our money but still have access to it when we need it? And there's not a lot of places you can do that. Like, you're not gonna go buy a rental property and lock it up in there and then say, ooh, I had an emergency, let's sell that property fast. That's not a good idea. So we need to have something that's liquid. This is where infinite banking comes in. Now, infinite banking, if you haven't heard this term before, is where we can actually use a type of life insurance called whole life insurance that has a tax-free savings component on it. So it's not just a death benefit like term insurance, right? We can actually save money inside this infinite banking plan. And if it's designed right, you pay very little cost and get much bigger returns. The great thing is, right now they're paying between like 5 and 6% returns on that money, and it's tax-free. See, even with my online savings account, even if I'm earning 1%, I'm still getting taxed on that 1%. But with this life insurance policy, I don't get taxed. And I can still access it whenever I want, usually get access to that money within a few days. So the great thing is I'm making like 5+% on this money, and I'm not paying taxes. That's like earning 7 or 8% on my bank savings account, which I cannot find anywhere. So instead, now my wife and I, we have a big chunk of our money inside the life insurance plan, because now that money's sitting in there, earning a much higher percent than what I'm making in the online savings account. We still keep a little money in the bank. You know, we gotta have money that you can walk into that day, go to an ATM or go to the teller and get that money out. And we have some money in the online savings account to earn a little bit of return. But I'd say about 3/4 of our money, about 75%, is sitting in this infinite banking plan where I can make a lot more money and make a much bigger return on that. Do the math. Think about this. Think that even if in your situation, if you had $50,000 in this plan that was now earning 5% versus earning 1%, right? 1% would pay you $500 a year, 5% would pay you $2,500 a year. That's $2,000 more by doing nothing different than what you're probably already doing right now. And so that's something we have all of our clients start doing now, is we start having them build up more cash there. Oh, and by the way, this is in a totally different video, but not only can we save our emergency fund there, but the money I invest, I keep there as well. Why? Because I can actually make money in 2 places at the same time. I can actually make money inside the plan, and I can invest it and make money in 2 places at once. That's the way I get to double dip on my money. I get to have my cake and eat it too. So again, time for another video, but that's what we do with this. So to recap, the biggest thing is that interest rates will go up, especially as they keep trying to fight inflation. They're gonna drive interest rates up. But on your savings account, it's not gonna go up as much. And even over time, savings accounts weren't paying much more than 5, 6% back in the past. Today, you would be lucky even to see that much. And so what can we do instead? We can do online savings accounts, but again, they won't pay a whole ton. We can also do this infinite banking plan that you can get as well. And there you can make much better return. You can actually diversify your savings into different places and make more money. So I'd love to hear from you. Like, are there things you're doing with your savings account? Are there ways you're making better returns? What are you using right now? Put that in the comments below so we can share that. If you like this video, check out why is interest so low on savings accounts.